My wife yelled upstairs this morning about the garbage truck coming and that I need to take out the trash. I dismissed her completely because that wasn't the garbage truck. That was me backing up the truck to buy the dip when Bitcoin fell below 81K. Fear has gripped the market by the cojones, and we've reached levels of fear worse than the FTX collapse. With Bitcoin down 25% in November and 40% from all-time highs, some people are starting to get concerns about whether Bitcoin treasury companies like Strategy are going to make it or not. JP Morgan is warning of MicroStrategy being delisted. Is this the Wall Street FUD machine kicking into full gear, or is there legitimacy behind this claim? There's an analyst out there claiming that none other than JP Morgan and Jamie Dimon are manipulating MicroStrategy. Are they shorting shares? Are these two things tied together? Tom Lee also thinks MicroStrategy is a victim of Wall Street hedging. Today, we're going to dive into this market manipulation, what its implications are for MicroStrategy, and as always, what you should be doing on days like these. Today isn't one of those tell you something new episodes. It's one of those remind you of what you should already know episodes. Nothing stops this train. This is Dante Cook with Bitcoin Simply. Let's go. Hot news for the day. Ever since MicroStrategy entered the big leagues of Wall Street with its Bitcoin treasury strategy that's taken the world by storm, well, the major institutions have started to take notice. And it's been rumored by Michael Saylor and others that the FUD media machine happening to MicroStrategy whenever its price rips, and also the movements in their stock, well, they don't seem to be totally normal. And with random hit pieces like this coming out today from JP Morgan saying that MicroStrategy could be delisted, you have to wonder, what's the actual manipulation going on behind the scenes? Is what this analyst saying in this video really true? This means that JP Morgan is lending out shares that it doesn't actually have.
So recently I posted a video about the margin requirement at JP Morgan for MSTR. Now, I've learned something even more interesting. There's a customer that was trying to send their MSTR stock out of JP Morgan. So they're trying to transfer that stock from JP Morgan to a different brokerage account. Okay. Now, if you hold stock in a margin account, JP Morgan can hypothecate that stock. They can lend that stock out, or they can use that stock and they can short that stock. Now, this customer wasn't able to send those shares out. JP Morgan didn't have the stock to be able to send out. So that means that JP Morgan doesn't have access to those shares. So they're either short or they lent out all the stock and they can't get it back, or they can't borrow other stock to be able to deliver out that stock. Now that means that JP Morgan as an institution is short to deliver on those shares. And as a huge institution and only trying to deliver out a small number of shares, that's pretty curious. Like, why does JP Morgan not have access to any shares to be able to deliver out to this customer?
And although this isn't as nefarious as a clip, there might be some truth behind this claim that big Wall Street funds are actually manipulating the price of MicroStrategy. And Tom Lee doesn't think it's as nefarious, but he believes that MicroStrategy is the only reasonable way to hedge their crypto positions.
Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
You have to wonder, if you're a shareholder of MicroStrategy, is this a cause for concern? MicroStrategy doesn't seem to be too concerned about it, so I will take their word for it. They say at current prices, they should be able to pay dividends for about 70 years. Michael says that they would have to see an 80 to 90% drawdown just to be collateralized one-to-one with their debt.
What if Bitcoin goes down more, though? Is there a point on the downside that triggers some sort of domino effect?
The company's engineered to take an 80 to 90% drawdown and keep on ticking. So I think we're pretty indestructible. Our leverage is, in the level of 10 to 15% going towards zero right now, which is extremely, extremely robust.
They have about $8 billion in debt and $50 million in Bitcoin equity. And so Saylor remains confident as he tweets things like, some will say that we got lucky. But one thing is for sure, when you play with leverage, you're bound to get burned. And that's why Jack Mallers and 21 Capital are taking a different strategy than MicroStrategy when it comes to being a Bitcoin treasury company and how they're going to finance their Bitcoin purchases.
Yeah. So to be clear, Jack, I mean, you're saying Strategy's model depends on perpetual leverage, while 21's model depends on perpetual accumulation, because those are two very different philosophies.
Yeah, I think, this could sound extreme or sound like a dig, but, it's not. We want to be the treasury company that can afford it, right? If you look at Tether and myself and our leadership team, so I co-founded the business with Tether. Our largest outside investor is SoftBank. We have what it takes to build massive cash generating businesses within the industry. Strike is one of the most profitable per employee Bitcoin companies in the world. Tether is probably the most profitable per employee company, period, in the history of mankind. So we have lots of ideas and lots of future plans to build cash flow within the market that gives investors an ability to participate in Bitcoin story through an operating business. And then conversely, we're already the third largest corporate holder of Bitcoin. We will be able to add to that position substantially once we're approved. And we want to be the largest holder of Bitcoin. And we think, we can take the best of what Strategy is, which is a large Bitcoin holder and ability to accumulate, whether it's through monetizing volatility, cheap costs of capital, access to the capital markets, and the best of someone like Coinbase, which is a first mover and a leader within the industries they focus, which Tether and I have been in our careers. So that's us. We do not necessarily want to add leverage to something like our MNAV. We do not want to add leverage to our common equity necessarily. That puts a lot of pressure on future dilution and shareholders to have to finance. We don't want new investors being responsible to finance, existing preferred owners necessarily, unless, we're missing something. And if we are, we're going to copy Michael Saylor. But so far, we're watching closely and have more of a directional focus on maybe optimizing for cash flows that would finance something like convertible bonds that we would raise in the future.
That's interesting. Yeah. No, I mean, the differentiator is there. I was talking to somebody this past weekend and they said, are these corporate treasury companies just turning into leveraged Bitcoin ETFs?
Yeah, but the interesting thing about that question is there are leveraged Bitcoin ETFs. If you want to leverage a Bitcoin ETF, you can do that on your own. And so the question is, at 21, what can we provide the market that others can't? And I think the very obvious answer is not everyone is Tether, not everyone has been in Bitcoin 13 years, not everyone has founded Strike, and not everyone is SoftBank. And so we plan to provide, our goal has always been be the best way to participate in Bitcoin story in the capital markets. We think we can bring both blue chip credibility and startup upside to the capital markets. And we feel as if that was missing. Coinbase, we don't think is a Bitcoin company. We think they're a crypto company. And Strategy does not have Bitcoin native cash flow, does not build Bitcoin products, and is relying on, as far as I can tell, and again, I know I'm going to get all sorts of stuff from Strategy shareholders, and it's not my intention, but I'm just trying to build a delineation of there's, being levered with expectations of financing it through common equity or through Bitcoin sales versus being able to build a business alongside it that can optimize in being levered and being more aggressive in Bitcoin exposure. That's where we want to live.
Yeah.
I'm not a shareholder, so I can speak on this with an outside objective opinion. I believe in spending less than you earn and avoiding leverage at all costs. And when opportunities like today present themselves, you should have some cash on the sideline to take advantage. 50% drawdowns are the normal for the best investors of the world. I always go back to clips from Charlie Munger, even though he said Bitcoin is rat poison squared, when he talks about this is par for the course for the behaviors that you need to have if you want to generate outsized returns.
I am continuously invested in American equities. But I've had my Berkshire stock decline by 50% 3 times. And it doesn't bother me that much. I regard that as just a natural consequence of adult life properly lived. So if you have my attitude, it doesn't really matter. I always like Kipling's expression in that poem called If, and he said, success and failure, he says, treat those two imposters just the same. You just roll with it.
Treat those two imposters the same. You just roll with it. Like the tweet from Ledn earlier, emotions get distorted in market. When the Bitcoin price rips, well, people get too excited. When it goes down, they get too bearish. Nothing stops this train. I tend to look at people who are excited about Bitcoin on days like these, like Scott Besson, who seems pretty cheery when he saw him in a picture last night at the new Bitcoin bar PubKey opening up in DC. Things look to be pretty good on the treasury side. And that's because he knows that governments have to print. Governments like Japan, who say that they're going to intervene if the dollar to yen ratio reaches 160. And they're talking about hundreds of billions of dollars worth of stimulus packages. And when you understand this, you understand what assets are better than others. Do you want to hold fiat currencies or stocks which can be manipulated? Or do you want to own hard assets, which are going to appreciate in value versus the diluted assets which are being printed into it? And that's why we work with a partner like Ledn, the leader in Bitcoin-backed loans, which allow you to never sell the best asset, Bitcoin. In order to never sell your Bitcoin, you borrow against it instead of taking out a traditional fiat credit loan. There's actually even no credit checks required. It's just 50% loan to value on your Bitcoin value. So if you post $2,000 in Bitcoin collateral, well, you can get a $1,000 fiat loan. The process takes less than 6 hours and the application takes less than 2 minutes. Go to learn.ledn.ao/simply to get started with 0.25% off of your first loan. Remember, there's no credit checks and loans start at just 12.4%, about half of what you could get with a credit card. Never sell your Bitcoin. Use it as collateral. We also partner with the Bitcoin Way that allows you to sleep easy and rest fine on days like these where there's calamity in the markets, but you're sleeping just fine knowing that your Bitcoin is safe and secure. They will pair you with a coach to help you to sleep like a baby during bear markets or Bitcoin price corrections like we see now, because your Bitcoin is going to be held in cold storage privately, safely, and securely. Schedule a free 30-minute consultation with their team to learn how to get set up with your Bitcoin resting in cold storage safely and soundly. Go to thebitcoinway.com/simplybitcoin to get started. On days like these, you're going to see the bears come out. Bears like Paul Krugman. In 1998, even though he was a Nobel Peace Prize winning economist, he had this to say about the internet. The growth of the internet will slow drastically as the flaw in Metcalfe's law, which states that the number of potential connections in a network is proportional to the square of the number of participants, becomes apparent. Most people have nothing to say to each other. By 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. Turns out he was wrong by a factor of $100 trillion. And here's what he's saying about Bitcoin today.
There is essentially no legitimate use for crypto. And nobody's using it for anything legitimate. Fewer than 2% of Americans have ever made a payment in crypto. It's purely a speculative asset or a vehicle for crime. It's used for money laundering and extortion and blackmail.
Blackmail?
Well, if you want to blackmail somebody, you want to be able to, have a difficult to trace payment. It's the most amazing thing. You can not find any. I've been in many, many meetings where we actually, me and my friends, my economist friends, as sympathetically as possible, explain to us what legitimate function does this stuff serve, and have never gotten an answer.
Well, if it's so bad, why will the comments of this video be filled with people screaming at us, calling us idiots?
Oh, because it's a cult. And the fact of the matter is the price has gone up, so people who bought in early feel very smart, and but there's my line about crypto is that it's technobabble plus libertarian derp, and that's pretty much it still. But people are very passionate about it.
My guess is that in 20 years, him and all the people that were wrong about the internet in 1998 will also be wrong about this AI bubble in Bitcoin. They're not bubbles, but real technological innovations, and they're going to be much bigger than you think. I'd be more willing to think like Mike Alfred than Paul Krugman.
There's a lot of, every 6 months they turn bearish on this and then they bounce right back because AI is a 20-year theme. It's sort of like being bearish on the internet. Like there were people who were bearish on the internet for the last 25 years, but they all made less money than people who were long, right? Long Bitcoin, long AI, easiest trades of your lifetime. You just hold them in large size for a decade. And we're at year 2 or 3 of a major uptick in AI capex. you're not going to see a huge recession with the biggest companies, the largest companies in human history with the highest cash flow, pouring money into AI.
Remove your emotions from your strategy at all costs. My coach used to tell me in sports, don't think, Dante, it only hurts the team. You can't say that in 2025 because kids are soft these days, but it does apply to investing. You have to remove your thinking and your behaviors on days like these and act rationally when the rest of the market is irrational. Buy Bitcoin in such a way that you remove irrationality from the equation altogether. Buy it in such a way that you never have to sell.
Like, I know people are going to do that. So I always advise people, buy the amount of Bitcoin that you can hold forever. So whatever that is, don't get cute and put 100% of your portfolio in Bitcoin and then try to decide when to sell to pay bills. I think that's wrong. It presents a timing challenge. You have to become a hedge fund manager. If you are a hedge fund manager, that's fine, but most people aren't. It's not what they do for a living. And you're asking them to become a hedge fund manager. Like you're going to have to decide which week, which month to trim your Bitcoin position to pay your bills. And I look at it differently, which is create enough fiat income with whatever else you do, own a business, own dividend stocks, bonds, whatever, and buy an amount of Bitcoin that you can sort of put in the vault and never sell it. You can choose to sell it if it goes to $1 million or $2 million or whatever. You can choose to sell some in the future. But if you're forced to sell it because you over allocated, then you're going to get yourself in a bad position. And I'm okay being sort of in the minority and being contrarian, but I'm pretty certain I'm right about that. I've seen way better outcomes if you remove the emotional side and the decision of having to sell.
You can call me the Glengarry Ross of Bitcoin because I'm going to say that you should always be stacking, even on days like today. Even when it's falling down all around you, these are the days when good investors make outsized returns. I remember in 2022 and 2021 during the FTX collapse when Bitcoin fell to 16K, and everyone thought that this was the time that everyone should get out. But there were some investors who backed up the truck and have made over 400% returns since that day. What kind of investor are you going to be today? Speaking of Glengarry Ross and always be stacking, one of the best ways that you can always be stacking and earning sats while you sleep is by partnering with a mining company like SAS Mining. There's no middleman, no markup, and no fluff. Buy a state-of-the-art mining machine that they will host for you with carbon-free, 100% renewable energy. And when they make money, you make money, and you earn sats directly into your wallet as you sleep. They're 100% aligned with Bitcoiner values, and that's why we partner with them on this show. Depreciate those mining rigs 100% before the end of this year and earn sats while you sleep. Use the QR code to learn more and always be stacking. As always, I'm going to encourage you on days like these, put the blinders on, look forward, lock in. This is Dante Cook with Bitcoin Simply. Happy stacking.